Are your savings stagnant no matter how hard you work? Make money work for you with MIDF Invest, an easier, safer way to grow your wealth by investing in stocks and ETFs from over 6,000 US companies. The bank is regulated by Securities Commission for your peace of mind, so you can keep your money safe while keeping it busy.
Hi, let me show you how easy it is to buy a stock from the MIDF Invest app. To start, download the MIDF app from the Play Store or the App Store. Registering your account with us will be very easy, and once your account is approved, you can click the trade button to begin your investment journey. Search for the stock that you like to buy, customize your stock buying options, tap on the Place Order button, and finally tap the Confirm button. And congratulations, you have purchased your first stock on the MIDF Invest app.
Want to earn from some of the world's biggest companies? Let your money work abroad. With MIDF Invest, you can invest in stocks and ETFs from over 6,000 US companies, including a wide range of Sharia-compliant stocks. Have questions? You can talk to our experienced happiness agents anytime. So, if your savings are still sleeping on the job, it's time to make them work a little harder.
Hi everyone, good evening. Let me just put up the slides for everyone. Hi and good evening everyone. Welcome to another webinar from MIDF Invest. Today we're going to talk a little bit about small cap stocks, right? And the thing about small cap stocks is that it's relatively affordable in terms of absolute amount, but with that also comes a little bit of risk. So we're going to talk a little bit about a couple of things. Number one, what are small cap stocks? The second thing we're going to cover today is how do we pick a small cap stock. The third thing we're going to cover is the pros and cons for a small cap stock. And finally, we're just going to conclude the webinar, right? So just out of curiosity, how many is this their first time for coming into the webinar? Please type number 1. And if you have came into the webinar for a couple of times, maybe more than 2 or 3 times, type number 2, right? Meanwhile, I'm going to just give a quick introduction about myself. My name is Adnan Hasbi, and I've been in the financial industry for close to 20 years already. And I first started my career as an auditor or an accountant for Big Four. And subsequently, I am in investments. And this is where I help my fund managers pick very, very good stocks to invest in. And right now, I'm talking a little bit about financial literacy. So the rules of this webinar is very simple, right? The rules of the webinar is if there's any questions, please do ask, right? The whole thing, or the whole reason why we're having a webinar is to enable interaction. So if you have any questions, please do ask anything, right? And aside from that, I'll be talking to you guys so that to make this webinar interactive, and do answer, so that way we have a very interactive session, right? So I see a couple of answers. Hanif, thank you very much. So, right. First and foremost, we're going to talk a little bit about the type of stocks which are listed in the stock market, right? So right now, the stock market is divided into different tiers or different type of stocks, and the categories are based on the market cap. The bigger the market cap, right, is on the topmost, which is the mega caps. The mega caps are companies which have market caps of above 200 billion. And how market cap is derived is when we take the stock price multiplied by the number of shares, right? So basically, in other words, right, the market cap is another indicator whether the company is a big company. The bigger the company, the bigger the market cap, right? So amongst the example of companies which are mega caps, right, and also large caps, are companies like the FANGs, right? Facebook, those are the mega companies. The next is Alphabet, Apple, Netflix, Google, right? Those are the big ones, and they have businesses all over the world, and almost all of us use their products in a daily basis, right? And hence, these are the mega caps. Next are the large caps. This consists of, surprisingly, when I did the research, these are the older companies, right? Which actually became popular maybe the past 15 or 20 years ago. These are the Walt Disneys and also the PayPals, right? And then comes the mid cap, right? As we can see over here, the mid cap consists of stocks between $2 billion to $10 billion, right? This consists of Etsy. And today, we're going to focus on the small caps, right? The small cap consists of companies like GoPro, Fossil. GoPro is, I don't know whether you guys still remember, back in the day, it was a very big thing back in the day, right? Where people used to bring the cameras and then they put it on their head. And then after that, while going for a hike or going for their biking activities, right? It was a very popular company, right? That being said, a lot of Chinese competitors came up, and right now GoPro is against all of them. So company is a bit in a shaky situation. Fossil, what they do is they are a fashion brand, and they do things like the Fossil watches and whatnot, right? So, okay, so real quick, what are the benefits for a large cap, right? So in Malaysia, right? Guys, put down in the comment section, what are large caps over in Malaysia? I'll just wait for a couple of seconds. Okay, so one of the large caps over in Malaysia, very popular, would be companies like maybe Maybank and Tenaga, right? So these companies, the attributes are, number one, they are very stable. They have a good track record, right? And the thing is, their earnings, right, no matter what, right, the economy is doing okay and not okay, right? Their company is relatively stable. It doesn't just drop, all of a sudden. Nestle, yes, Akmal, betul. Nestle is another one. You notice, right? All of these stocks, right? They just stay at a certain level only, stay at a certain level, stay at a certain level. So the disadvantage, however, for big caps, right, is that the growth potential, it's relatively not there, basically, right? It's already at the peak already. So they are mature company. So once you're a mature company, right, you notice even the stock price is also very flat. So, if someone makes 10 or 20% of Maybank or Nestle, right, it's like, whoa, that's big news, right? The whole thing of it all is big caps, it's very hard for their stock price to naik, right? And that's one of the reasons why a lot of people are actually looking towards mid cap and also small cap, right? So an example of a an example of a small cap company, right? I'm just using Malaysian examples first, then we go to the US, right? So examples of a small cap company, right, will be this company here, right? Solar West, right? And if you could see in 6 months, it rose by 40%, right? So it's literally mind blown, you know. The whole thing of small caps are, number one, they can give shareholders the potential of growth, right? And every time when someone talks about small cap, right, they every time use the word growth, small cap, growth interchangeably, right? Second thing about small cap is that they're undervalued now, basically, right? The whole thing of it all is that small caps, since not many people know about small caps, they are relatively undervalued or underpriced. The third one is they give a lot of innovation, especially if it's a new company, they just got listed, right? They have a lot of new innovation. The disadvantage for small caps in the next couple of slides, right, we can see is that they are volatile, they have limited resources, and to get information is very limited. In fact, to prepare for today's webinar, it took me and my research assistant a couple of days just to dig out information. A lot of small cap information is very hard to come by, right? And just to actually explain why this stock actually went up, right, is that quite recently it was announced that the Malaysian government, would be moving towards solar energy. And with that, we could see the stock price just shoot up like that, right? So these are the advantages of a small cap. However, just curious, right? Is all growth stock small cap, right? Let me repeat that question again, right? Are all growth stocks small cap? Yes or no, right? So, okay. So the answer is actually, I gave the answer over here, right? Basically, not all small cap stocks are growth stocks. Let me repeat this. This is a very important point. Not all small cap stocks are growth stocks. There are some small cap stocks which are not growth stocks at all, right? Even though you can call them small caps, but their growth is not like a super growth, right? Some small cap stocks are growing very quickly, while others do not grow that quickly, right? And the whole thing of it all is, we're going to go in the later slides, right? Is this. Normally, when a company just starts, right, especially when a new company just starts its operation, right, we can see that in the initial stages, if anyone has been in the startup space, you guys would know, the first couple of years after starting up a business, there will be a high cash burn rate, basically, right? It's just like opening any business, when you first started opening a business, you find out you need to buy, you need to buy a lot of things, right? At that point in time. Also, when you first start the business, we're going to make a lot of mistakes, right? And we're going to also there's a lot of trial and error. So in the introduction stage, there's going to be very high cash burn, right? So having said that, however, once the small cap actually has leveled up, and once they already know what to do, right, the management gets better, this is where they move and graduate to the growth stage. And the growth stage is where you can see the amazing returns. So this is a very important point, right? Not all small cap are growth stocks, right? Small cap stocks can consist of both growth and non-growth stocks. Basically, this gray box is the small cap universe, right? And it consists of stocks which are not growing that quickly versus stocks which are growing very quickly. And part of the reasons why is, even though, right, these are small caps, I already circled it into two regions. Small caps right now, they have the first stage where they're burning a lot of capital, and they're trying to figure out how to compete in the space, right? In their space, basically. The second stage is where the small cap actually, once they already leveled up, once the management has a bit more experience, this is where they are going to go for the growth stage, right? So over here, these are a lot of small cap companies, right? As I mentioned a while ago, they are very volatile in stock price. You can see that a lot of these companies, they maybe once they get listed, maybe from $1, it shoots up to maybe 40 or 50 US dollar, and it goes down to $1, right? This one over here, maybe $6, it shoots up to maybe 40 or 50 US dollars. Right now it's $6, right? So this is the price volatility, right? And we can see this. Having said that, right, we can see that a lot of these companies are in the introduction stage where they have a lot of cash burn. A lot of these companies, they just started their operations, right? They have things that, their prototype, after they spend many months for the prototype, and then the prototype does not work, maybe terbakar, right? Or sometimes, they tell analysts that they're going to come up with 1,000 products, right? And then when the day actually comes, they actually produce maybe 400 or 500 products, right? So they go below analyst expectations. And this is where the introduction stage is. And that's one of the reasons why we can see a lot of these stocks, right? When it first got listed, they tell they tell analysts, that they have potential, they have all of these ideas, so on and so forth. You can see that there is a spike in a lot of these prices, right? The first is Nikola. The next one is Lucid, where you can actually see it go up, go down, go up, go down. And then the last one is Neo, right? So this is the introduction stage where every time people believe that they have a high growth potential. But having said that, sometimes the management cannot produce. So once they cannot produce, then that's where the sell down comes, right? Having said that, however, we can have an amazing story like this, right? Where even Tesla started out like a small cap stock, right? And at that point in time, we all know that the founder of Tesla, he was maybe 2 or 3 weeks before he used all his money, right? And he used his personal money to keep the company afloat. There were times also he was thinking of selling 1 or 2 of his businesses just to keep some of his companies afloat, right? And there was a story of him staying in his friend's house also, right? And this is really the struggle of a small cap, right? But having said that, once they have really leveled up, once they know how to produce, once they know how to use their machinery, once they already get into the groove of everything, if you are an early investor for a small cap, right, especially for Tesla, right, you can see that the returns is about 18,000%, right? So the point of what I'm trying to say over here is that small cap does give amazing growth returns. But having said that, during the early stages, they need to go through a lot of trial, errors, mistakes. And this is where you can see the stock price just move up and move down. But having said that, once they reach to the growth stage, you will see the stock price just shoot up, right? So for Tesla, guys, any guesses as to where Tesla is? Are they in the introduction stage or are they at the growth stage? So this is a given. Type 1 for introduction stage, type 2 for growth stage. What do you guys think? That is correct. Definitely. It's a growth stage. Basically, if you look at the stock price, right, you can see already, right? The stock price just actually shot up, right? So again, I just want to reiterate this point, right? Because when people talk about small cap, right, they always throw around the word growth. Not all growth stocks or not all small cap stocks are growth stocks, right? So I just want to actually clear the misconception, right? If there's one thing we can actually pick up from this webinar is that this particular thing, right? Not all small cap are growth stocks. And remember these 2 stages. In the introduction stage, it is very normal for companies to make certain mistakes. Their prototype maybe tak jadi, right? And I'm sure a lot of you guys know, Tesla, when they first launched their rockets, right? A couple of rockets just exploded, blew up in the sky and whatnot, right? Right. So this is the introduction stage, and that's the prototyping, right? But once they already get a really good, amazing product, And once they already start their manufacturing, this is where they can start growing the company and scaling, right? Okay, so just a quick, I guess, this I just want to just go through with you guys right now that at this point in time, MIDF, we are having this thing where if you guys were to refer your MIDF to any friends or family members, right? You guys will stand to get some points, right? And if you guys have not signed up for MIDF yet, I have my code, right, which is almost 9790, almost 9790, right? So if you guys want to help I guess myself out, right, do use the code almost, OMUS 9790, right? And why right now? Why do referral? Is basically this. Our brokerage fee has already dropped, and right now the brokerage fee is as low as 199, right? So it's getting more and more affordable to move in the US market, right? Okay, so back to what I was saying, right? About Tesla, about growth stocks, about why even look at these stocks, right? So I think we should maybe just talk about this on a more personal level, right? And if any of you guys came for my webinar before, okay, so I know Hanif has actually came to the webinar. I'm sure you guys would have heard this story, right? Of how to start investing, right? And how I started my journey towards investing, right? Basically, back in the day, I used to also earn 1,008 back in the day, right? And at that point in time, there was no Coffee Bean or Starbucks, right? Well, Starbucks and Coffee Bean actually was very new back then, but not many people actually drink Starbucks and Coffee Bean. So I managed to actually save money by not drinking Starbucks and Coffee Bean, right? So the example which I like to give over here is that if Ali earns about 1,008 and he actually drinks coffee every day, right? So assuming if we just change one habit of not consuming coffee on a daily basis, and say assuming the coffee costs about $10 per day, right? If he instead goes to the office and bancho his own coffee, right? He can save that $10. And with the $10 or the 10 ringgit he saves, right? On the right hand side, we can see that if you actually invest in a growth stock, $10 every day, and this is theory only, this is theory, right? Is every day you just invest $10 every day, right? And if we look at the growth stock, right, can actually reach the $1 million, right? And I'm sure many of you guys also know of people that actually invested in Tesla, especially in the early days, and they made quite a fair bit of money, basically. So, another thing which I want to say, right, is that while a lot of people are talking about growth stocks, how small cap stocks are growth stocks, right? I think really sometimes, we have to, say that sometimes it may be a myth whereby not all small cap stocks are growth stocks, right? And this may happen where a lot of people actually buy the stock as it runs up, right? And, just out of curiosity, right? If anybody bought their stock as got stuck before, right? I know a lot of people actually bought glove stocks at one time and got stuck at gloves. Maybe type gloves if any of you guys are stuck in whether you guys bought at a very high price, right? To type gloves if any of you has happened, basically. But this actually shows that sometimes if we are chasing a stock as it goes up, this is the risk that may happen, right? So the big question right now is, how do we even invest, right? How do we even invest, right? And what's the least risky way of investing in small cap stocks, right? So I think over here, what I've done is I made this into a very nice color diagram, right? Where we can see that salary, right? The 50, 30, 20. 50% is for our needs, 30% are for our wants, and 20% are for our savings, right? So 20% of our savings can be used for investments, right? So this is a very basic allocator, lah, basically, right? On, if anyone has a question like, hey, how do I even start investing? So this is the 50, 30, 20 rule. And the 20% should be used for saving and investing. The next thing is from that investment pool, which makes 100%, right? So from 100% of our investing funds, this is how I'll further break it down, right? 50% is for ETFs, 30% are for big caps, and 20% are for small cap. So if you have at least 70% of your investments in very safe, diversified assets, should you lose any money in the small caps, it will not impact your portfolio that much. Okay, this is a very important point, right? I guess this is a pro tip, right? And I've seen a lot of asset management houses use this. And, quite recently also, EPF just came out with their results, and their results were excellent, right? And they also do something which is called asset allocation, right? So again, 50% are for ETFs, 30% is for small cap, 30% is for big caps. And if you're wondering what are big caps, as I mentioned, the FANGs, which is Facebook, Apple, Netflix, Amazon, Google, right? Those are the big cap stocks. And then comes the small cap. The next question is, why should we even touch small caps, right? And basically my argument is this. Sometimes we just do not know which small cap will give us the 1000% return, right? And that's one of the reasons why I would say just allocate a small amount, right? So that if there is any of these small caps which actually reach 1000% or the 18,000%, right? You already have some money invested in the small caps. While at the same time, if there are small caps which actually are very volatile in stock price, right? You can always use your engine. Your ETF is a growth engine and your big caps are your growth engine, right? So right now, let us go into this ETF. And I've been talking about this ETF over and over again. But this ETF is called QQQ. And we can see that per annum, it grew by about 19%. If you look at a 5-year basis. And 19% for your overall portfolio returns is not bad, basically, right? Right. So if anybody wants to invest, this is how I will do my stock picking, right? And as I mentioned, I used to work in the institutional space, and EPF is one of is also in the institutional space, and this is how most institutional investors do their stock pick. This inverted triangle, which actually consists of looking at the macroeconomics, the sector analysis, the industry analysis, and then comes the stock, right? So let me give you guys an example of this. Right now, as we know, on a macro level, EV is getting more and more popular. More and more countries are moving towards EV or electric vehicles, right? China is moving into electric vehicles in a big way, and they are giving tax incentive for their rakyat to buy electric vehicles over in China. The same can be said with regards to California, right? And that's one of the reasons why we could see stocks like Tesla shoot up like that, right? The next thing is also the AI. And right now, we can see a lot of AI-related stocks, NVIDIA and Taiwan Semiconductors. both of them shot up quite significantly during this past couple of months. And to bring it down over in Malaysia also, remember the example which I gave in the earlier part of the presentation, which talks a little bit about Solar West that does solar panels, right? As soon as the government says they're going to go towards renewable energy, we could see a lot of solar panel players move up, right? So again, remember the inverted triangle, right? So I know it's going to be 9 very, very soon. I just want to say that we're going to cover this in the following week. But I just want to conclude by saying this, right? These are the stocks on our watch list, right? Let me just give you guys a quick rundown of the stocks and what they do, right? So Sprinkler is an AI stock and they focus towards customer success. They use AI to actually go through social media websites, and then every time when an agent actually talks to any clients, right, this AI can already identify this particular customer from all the interaction that customer has done on the website, or maybe they have done any earlier interaction with the companies, right? So this AI will pick up everything and share it with the agent, right? So this is an AI company. BioCares is a farming company or an agri company, right? And as we know, a lot of food right now is getting more and more expensive as food is getting more scarce. So right now, we can see that a lot of biotech companies or companies which are moved in the agri-tech, right? They're getting more and more valuable as food is getting more scarce. And the last three are EV companies, Nikola, Neo, and Lucid. And why these companies are actually growth companies, as I mentioned, the whole world right now, they're moving away from the diesel and also the petroleum engine, basically the combustion engine, right? Our normal cars, right? So they are moving more and more towards EV. And as the whole world moves towards EV, right? And if you guys want to invest as an early investor, these are the three stocks you may want to look at, right? So over here are the consensus ratings and also the target price, right? The target price is what the analysts forecast for these stocks, right? So I think what I want to highlight over here, right, is if you look at companies like Nikola, right? Nikola, I think their stock price is about $1 or $2, but the consensus target price, or what the analysts in the United States are saying, is that Nikola, their target price is about $11, right? And then Neo also, at this point in time, their stock price right now is $10, but in the United States, analysts are forecasting about $29 US. Basically, what I want to say is this for as an ending remark is this. A lot of the stocks, right? You can notice that their stock price is very volatile, right? So if you want to buy the stocks, right, I would suggest a trading buy, right? So you buy low, sell high, buy low, sell high, because the stock is very volatile in nature, right? So that's my small little advice over here, right? And if you look at the analyst consensus, it shows that there's upside, basically. So that means there's very minimal downside risk, in other words, right? So, like I said, we're going to continue this webinar next week, right? But I wanted to talk a lot more about asset allocation, and I wanted to talk about, not all small cap stocks are growth stocks, right? So that's what I want to say, right? So I see, before I end, I see one more question. If anybody has a question, I can answer them, right? Okay, anonymous attendee says, what's the ticker symbol for Sprinkler and Nikola? Let me just check over here. Okay, so Sprinkler, ticker symbol is CXM, right? And you can see the year-to-date price also, it shot up lah. Basically, why Sprinkler shot up is basically of the AI play lah. Because right now, a lot of people are investing in all the chip players, right? So they're like, what's there to invest? What's there yang tak naik in terms of harga, right? So this is one of them. Where it's relatively cheap, and we can see that the money actually rotating, and they found this particular AI stock, they masuk this AI stock, right? And Nikola is NKLA, right? So I guess my ending remark is this lah. A lot of these stocks, they are at the very initial stages of a startup where they burn a lot of cash, right? And when they burn a lot of cash, right, what will happen is that the risk is there for investors. That's why their stock price is very volatile, right? So when I say trading buy, is basically when you buy the stock, you want to look towards selling it in once the stock price actually moved up maybe 10 or 20%, right? So, and we will continue this the next week, where we're going to talk a little bit more about these companies and what they do. But just as a teaser lah, these are the 5 stocks that we actually have on our watch list, and I hope that you guys like this webinar, right? So with that, thank you so very much, and I hope to see you guys next week for the second episode. With that, take care, guys.